Alright, guys, so let's talk about Mexico and let's talk about China. What do they have in common? Well, they have both been threatened by Trump's trade war. This is your economic apocalypse update, and things, well, they're getting worse one day at a time. We are beginning to see Mexico and China close ranks as we get closer and closer to a new US president. A few weeks ago, Trump threatened to slap China and Mexico with trade tariffs, an additional 10% for China and a flat rate of 25% for Mexican imports coming into the US. And this is very scary for Mexico, and we can't overstate how much of a shock this is. The US accounts for over 83% of Mexican exports, so the threat of a tariff is very real. And whether Trump is bluffing or not, the Mexicans, they have to view it as a clear and present danger. A big part of this threat revolves around China making stuff in Mexico and shipping it to the US. Thanks to NAFTA, goods made in Mexico can be shipped to the US tariff-free. It's obvious that Trump wants to close this loophole. It's a hint to Mexico to kick Chinese companies out. But something interesting just happened. Mexico is scrambling to reassure Chinese investors. We have Mexican envoys rushing to tell Chinese companies that Mexico is still a fantastic destination to invest in. This is an important move that we can't ignore. It tells us how shrewd the Mexicans are and why, like many other countries in the world, playing both sides is necessary to survive. The US is the top dog today, but it's a declining economic power. China is facing a ton of US sanctions, but it's a rising dragon. Mexico needs both. They still need Chinese factories coming in. Listen to this. It doesn't matter if it's from Japan, from Germany, from China, it becomes a Mexican company and it becomes part of the regional supply chain. This is a statement from the counselor at the Mexican embassy in China. So we know Mexico is serious about preserving Chinese investment. It's critical we understand the scale of Chinese money pouring to Mexico, and we need to put things into context as well. We know Trump has threatened John Deere with huge tariffs if they manufacture in Mexico, so it's very likely investments from US companies could be drying up in 2025 and beyond. Conversely, Chinese industries are setting up shop in Mexican cities. Chinese direct investment reached a 13-year high last year. Capital expenditure itself has surged to $5.6 billion. And since 2020, the arrival of new Chinese firms in Mexico has almost tripled. And if you're Mexico, you want this to happen. As US companies leave, they take jobs away with them. Chinese companies will more than compensate for this. Just the value of Chinese investments isn't enough. We must also view this through a quality lens. What types of companies are coming to Mexico? Because what China is providing is the future of global trade. They aren't building luxury boutiques or sweatshops. Chinese companies are building critical industries in Mexico. In 2023, nearly $4 billion of major FDIs were announced in the country. Over 70% of this came in the automotive sector. And we are talking about cars and EVs, high value products being built in Mexico. The second highest sector is machinery, technology, and electronics. And once again, Mexico is climbing the value chain with Chinese money. And that provides better paying jobs and turns the country into a modern manufacturing hub. If Mexico sides completely with the US to secure their exports, this eventually will hurt the future of their industries. Trump wants to bring back US manufacturing, that much is clear, especially in cars and heavy industries. And if America can satisfy their own domestic demand, where does that leave Mexico? Out in the cold. So it's a delicate balance to be struck. The Mexican president is already admitting Chinese companies are wary of Mexico. BYD has not given a firm proposal for their EV plant in the country, so Mexico has to play ball or these plants could shift to Latin America, including Brazil. Because one way or another, Chinese EVs will enter Mexico. It would either be made in the country and create jobs, or it will be made elsewhere. And once you understand this, it's clear as day that Mexico won't abandon China. There's simply too much at stake here. The trade war between the US and China also benefits the Mexicans. Trump is most definitely going to hike tariffs on Chinese goods, and as a result, exports are going to fall. Since Trump took office in 2016, a clear trend has been forming. Because of US tariffs, Chinese exports to Mexico has flown up, especially after 2020. Chinese companies are sending a ton of intermediate goods and inputs to their factories in Mexico. And this gets manufactured into goods and gets pushed into the US consumer market import tax free. Now, this might look like China's winning, and they are, but Mexico also charges tariffs for Chinese goods coming in. It's way less than the US for sure, but it's Chinese companies paying the tariffs to bring in the inputs for assembly or production in Mexico. So Chinese companies are bringing in factories, they're bringing in expertise, investment, and government revenue. And that's why no matter what Trump says, Mexico-China relations won't break. And this number alone tells us why. In 2023, bilateral trade between them amounted to over $100 billion. The year-on-year increase was almost 12%, a strong double-digit rise. Think of the number of jobs and industries these trading deals support. Abandoning China for the US is impossible. You'll close off growth in 2025 and beyond. And this is where things get really wild. US companies themselves still need imports from China. Closing trade directly with Beijing or through Mexico is unthinkable. Costs will simply shoot up. In a hilarious report, we find that Trump's tariff plan has a $64 billion import hole. It seems US importers themselves, American companies, are underreporting purchases to dodge the tariffs. And the numbers simply don't add up. In December, China exported $427 billion worth of goods to the US. However, import numbers only show $343 billion. So there's a big shortfall of $64 billion. Something is missing. And this tells us how dependent American businesses and consumers are on Chinese goods. People and companies, they simply want low prices. How is this even possible? How do importers get away with this? Well, it's thanks to this weird loophole called the de minimis rule. US buyers themselves are finding tactics to dodge the Trump tariffs. According to the rule, small packages valued at less than $800 don't get counted or tariffed by the US. And since 2023, exports of small packages have effectively doubled. So companies big and small can definitely exploit this. Instead of placing a big order for Chinese materials, they could split it into multiple orders under $800. The average person on the street can still get their stuff from China. Most orders, well, they'll be under $800 anyway. Chinese brands like Temu and Shein won't be collapsing anytime soon. So actions have consequences. Trump's tariffs won't tear China and Mexico apart. It could actually drive them closer together. US consumers themselves are finding loopholes. And this is where we must talk about China and gold, because Beijing is about to turn up the de-dollarization fire once again. For the last 6 months, China stopped buying gold, and we mentioned how it wasn't too much of a concern. Over the last 12 months, gold went from under $2,000 to over $2,700. It has corrected down to $2,650, but that's almost still a 30% return year to date. China is just like any other gold buyer. They're just like you and me. They rather buy gold at a cheaper price than at record highs. They know the dollar is a hot potato and it's better to store their earnings in bullion. So they stepped off the pedal. Trump's win also sent the dollar soaring, so the price of gold took a breather, it corrected down. Well, all that is about to change, guys. China is back buying tons of gold, and this is when prices are near record highs. China isn't an accidental buyer, it's a clear sign that Beijing has made their calculations, they've punched in the numbers. They've decided to exit their holdings of US assets, and gold is a very important alternative for them. The Chinese bought another 160,000 troy ounces last month, and this is equivalent to 5 tons of gold bullion added to the vaults in Beijing. Since September, China has increased their vast holdings by 15%. This incredible jump is a de-dollarization signal to the world. It's their Batman signal to BRICS and other countries to diversify away from the dollar. And we must look through the lens of China. Over the last month alone, we had two critical events erupt. Firstly, Trump threatened to tariff Chinese imports, so trade with the US could definitely drop. China needs to do more business with the world. Secondly, Trump also threatened BRICS with his dollar threat. If you de-dollarize, you risk a 100% tariff on goods coming into the US market. As the US moves towards protectionism, China is trying to globalize the world further to trade. And to do that, China needs to sell more and they need to buy more. We have seen this chart 100 times now, but it still bears repeating. In 2023, China's share of cross-border trade in RMB surpassed the dollar. Nearly 53% of transactions happen in RMB instead of the US dollar, and this trend will only continue as Trump takes office next year. In fact, it could fly to the moon as the US isolates itself. This is the predominant trend in global trade. But another question arises: if Trump tariffs the world and global trade with China grows, there would be fewer dollars circulating around. And if that's the case, there could be big consequences for US assets. We could see foreign countries abandon traditional assets like US Treasury bonds. More money could flow into gold. And we have to take the threat to BRICS seriously. Yes, it's needless provocation. The dollar is still the reserve currency of the world. However, the more times you slap the world with this threat, the more they will diversify away. It's a reminder to everyone of one simple fact: the US, they need the world to use dollars and recycle them back into US assets, or the house of cards could collapse pretty quickly. Now, this trend of countries shuffling their central bank reserves is already happening, and going forward, gold is going to be a clear winner from this. Since 2015, the dollar share in reserves has dropped from 65% to 58%, and that's a very big drop considering it's hardly even 10 years. Meanwhile, the price of gold during that same period has gone from $1,200 to well over $2,300 in June this year. That's an incredible bull run, and it's money coming from institutions. And this is just during Biden's term. With Trump coming back, he could supercharge this trend and send prices soaring even higher. His plan of a trade war is one thing. Trying to bring back US industries would also mean spending a ton of money and, as a consequence, a weaker dollar. So either way, currency debasement is going to continue. The only question left is how bad can it get? If it goes all the way pedal to the metal, the US might make de-dollarization a whole lot worse. But let me know what you think. Will Mexico abandon China for the US? And how much more gold is Beijing going to buy? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.